There we go. And so the open drive lower would have us opening at approximately right here, and then so a traditional or picture textbook open drive lower would have us with 3 bars down, right, with the first bar marking the high for the day. So that would be the first indication. What are the clues, right? You should essentially have a checklist for an open drive lower, right? 3 bars down or something similar to that, right? It can be a variation on this, but importantly, half gap is not filled and gap fill is unable to get filled. Now we can still have half gap filled and have an open drive lower. It's just the strongest ones have no half gap and no gap fill, and the first 5-minute bar does mark the high. There's other ways to get it. This is just the most common, right? So if that's the case, right, if you're seeing lack of rotation, you should have it in your trade plan already. We already know based on history of prior markets, and I'm going to pull this up for you here real quick. Okay, so that everyone understands where I'm coming from. I don't feel like I'm very much of a rush because there's frankly not a lot to talk about that's different from yesterday. And the reason why there's not a lot different from yesterday is because we had an inside day. Okay, so it's just been slow and grindy. So I'm simply preparing myself at this point for a change in pace versus having a significantly different day. So if I crunch all this up enough and I look at what the markets look like when they finally rolled over, okay, so the last few times that we've had any kind of significant downside, first of all, interestingly enough, both times they occurred late in the day or later in the session, as in this case here, right? And even here on this down day, it occurred from later in the morning. I just actually noticed that, so that's something to pay attention to. Again, those weren't given by open drives lower, but if we look a little further back than just the recent trade activity, right, you can see that most of the open drives down have, first of all, that most of them have gotten responsive buys, right, at some point for significant rotations higher before it continued lower. You can see that here. Here, I'll expand this out. Going back into March, okay, you can see where we had, from gap ups, we had rotations down that had significant reversals, meaning these were close to between 7 and 10 points. In this particular case, we actually cleared the high and didn't roll over till later in the day. It ended up being a trend day down, but man, that was tricky as hell, right? They really smoked a lot of people who thought, oh, we've got the downside. Now, this is important, okay, for a lot of reasons. There are going to be people, I know from not looking at the Twitter stream, I'm just getting feedback from other guys that I've been speaking with, that there's a lot of guys out there that are saying, hey, everyone's calling for a top, or a lot of people are top calling right now, right? So if you look, this was early March where a lot of people were calling for a top, right? So look at this process of getting a top. Okay, so first let's get some context, then let's bring it in a little bit. Okay, so context-wise, right, you can see we just came off of a big run-up from 1730, and this is where we're sitting right here at about midway into March, right? And we're looking at 1870. So that's what was that? 1720 to 1870, 150 points, right? And we had people calling for tops galore. Now I'll go through where I'm going to take the trades in just a second, but I think this is actually fairly important. What I want to point out was, even though people were correct, and we were about to correct, right? We actually had a pretty good drawdown when we head towards April, right? If you look at this, there were significant responsive buyers consistently back to the upside through all of this, right? Even as the market, okay, I'll continue to drag us through this, right? This was the first day where really if you shorted and you just stayed short, you actually ended up closing somewhat close to the low of the day. It was the only one day where it actually worked. Every other day in here, right, you can see even the day after, right, responsive buyers actually had a pretty decent opportunity back to the upside. And I would even argue that from our standpoint, since we rarely just say, since it's very rare for me to have the market open and just simply take a position, I would actually argue that the upside trade, right, was easier, and that the short was actually the more difficult trade, right, because it forced you to come in either immediately at the open, and even then you had to sustain either massive counter rallies or you ended up losing money as the market went against you each and every time. Okay, so if you look from the time we started to get downside moves, right, look how long it took. Get perspective on how long it took till we actually started rolling down. I'm just gonna kind of slowly scroll through this, right? We're all the way into April. Okay, it finally took until we got to April 4th before we had a decent actual 2 days of moves to the downside. And even after that, look at that, the moves following that were actually easier up for the following couple of days than they were down. As a matter of fact, in all of this, right, there's been very precious few days where we've actually opened at the high and closed at the low. Almost every other day's had significant responsive buying at some point through the course of the day. So my point to this is this. In the morning, even if we end up with a day that looks like this, right? Okay, first of all, notice we didn't actually get an open drive lower in this particular scenario. Okay, and of all the days that you had shorted, this is one of, I think, 3 days that I found that if you shorted near or at the open, you actually made money and closed somewhere near the low. But that's out of a month and a half of trading. Okay, so that means you would have gotten pretty much your ass kicked on every other day and had to have captured these days perfectly and made up for all the money you lost trying to capture the downside out of the gate on all the previous days, because you got stopped most likely in almost every other scenario, right? And it was simply easier if you were patient, right? And on most of these down days, if you simply sidestepped and waited till after 9:30, if you recognized the open drive lower, right? Simply sidestepped and waited till after 9:30 to initiate your position, you had a lot easier time getting position and making money. And remember, all we need is 1 or 2 trades a day. Okay, so I've gone through that and hopefully dispelled everyone's eagerness that we have to capture the short side. We don't. It'll be easier after it breaks than we are right now. So flipping back to the chart, where am I taking my trades today? Okay, so here's my concern. This is support, basically 1911.50 to 1913.50. My concern is if we break that 1916 from 1960 down to 1911, it's not a significant rotation lower. This kind of puts me in a hard spot. So this is a 10-point rotation lower from the prior day's close, which is usually good location. However, relative to where we are opening, it's only a 6 or 7-point rotation. If we end up with a significant open drive lower and a push, we're going to blow right through that 7 points, and it's going to end up being a stop. Okay, so you have to consider, okay, if you've been taking those smaller rotations for moves back to the upside, okay, you got to look at your P&L and say, can I handle getting run over the first time through? If I can, and I can still go on to take the following subsequent trades, this zone is fine to take the first time in, okay, particularly the back of the zone towards this 1911, 15, 1912 area, okay, for a 2-point rotation higher. Again, going to your trade plan, if you cannot do that, okay, if that stop's going to kill you for the day, I would chill on this unless I had 1 minute tick divergence after 9 a.m., okay. I will take a long at this 1907.50 to 1909.50. We discussed this yesterday, and this 1903.50 to 1905.50. I will take a long right after that. It's extremely poorly auctioned under 1903.50 all the way back to 1897.50. I believe is the zone below. Let me take a look to make sure I got that right. 1897.75. Okay, there is psychological support this 1900, and there's a dash right here at 1899 that someone might try to turn it from, but there's really nothing here. Okay, it's really when I'm going to have to make a decision, right, as to whether I take a trade. The reason there's not a zone here is I could technically put a zone here from 1899 to 1901, right? But my concern is this: when there's an open gap right below, and we're coming right out of a poorly auctioned area where you can get a lot of momentum going, I would rather see it stretched down into where the open gap is, and I have much higher odds of getting the push back higher. If you want to throw this on your chart and you see 1 minute tick divergence, that's fine. I'm quite certain that someone will try to step in at 1900 even if we get down there, but I will wait patiently and see if I can't get that 1897.75 to 1895.75, and instead what I would use in this area is if this ends up being a first hour low, looking for a trap trade in this location if we get down here. Okay, so just to be clear, I'll take a trade here, I'll take a trade here, I'll take a trade here, and then I will look for, if we get down to this area, I'd prefer to set up a trap trade. And actually, if we do set up a trap trade, I would actually rather this trap set up later in the afternoon, like around 1:30 in the afternoon, versus earlier in the morning. It doesn't have to work that way. It's just, it's nice when you get them trapped late in the afternoon. People are overcommitted to the downside. People are going to be very eager to get to the short side, and they usually get trapped, and they give us a nice push up. Also, keep in mind, in order for a market to roll over, I've been trading for a lot of years, okay? Something bad has to happen. Usually it's not sufficient for them to say we're technically overbought, or where the indicators are maximum. We can stay overbought for a long, long time. My experience has been, in order for a market to break, outside of a little 1 or 2% correction, you usually need some kind of news to push that correction to make it happen. Either an economic data point comes in and misses massively, you get a blow off top where you get a gap up, they push up hard and they trap a lot of people higher. But generally, what the pattern has been on these gap downs has been, it has found responsive buyers. I'm going to assume that we're going to continue to find responsive buyers on these push downs, okay, unless something changes dramatically. And we'll know it. We'll see the open drive lower, right? But even within that, I'm not going to be over eager to commit to the short side. There's just too much support underneath, and there's too many people that have been watching from the sidelines. Even if we get one of these days where we just trend day down, we close at the low of the day, almost every single example I have found going back for the last 8 months has found responsive buyers back to the upside the following day. We either gap and go the following day, or we actually rotate lower, which would be the best, find responsive buyers, and we actually end up with mirror image moves where we come right back up to the high, right? So we are working off of, we are not one-timing. We've stopped one-timing, and so I am looking for a change in direction, but I think that change is probably going to be more like balance. Okay, if there's any change at all, it'll be more a change into a larger balance area than into a market that is a bear market or a corrective market. Okay, so keep those things in mind. Let's go and look at where I will look for shorts. Okay, and by the way, if you look all the way down on the chart, right, starting at this really this 1890 area, all the way down to 1878.50. I'll mark it down. Here, just make it 1878 for easy conversation. Okay, this is roughly, depending on which swing low you measure from, this whole area is roughly half back. And if we do get down in here, I will start. Obviously, I haven't posted the zones that are in this area. You can look on yesterday's chart. They're the same zones, right? I will look to this area to attempt to launch swing trades back to the upside. From here, that's roughly half back. That's been a money trade for over 2 years now on the ES. And first time in, somewhere in there, I will see if I can't get a setup, whether it's via a trap trade, but I will intentionally either pick up out of the money calls or execute a swing out of either using YM or an exchange traded fund in my other accounts. But one way or the other, I'm going to try to launch a counter trade back to the upside, and hopefully at least for halfway back up to the highs, if not all the way back to the highs from there. So just FYI, this is an important area, right? And it certainly means as we get to the back of these areas, right, after you can still have a short launch in these areas, right? We can get a rotation up and then get a rotation down for 2 points, right? All it means in this area is I won't be pushing. I won't not take a short here necessarily, right? But I will not push. I'll be very quick to scale in these areas to the short side, and I will be very slow to scale to the long side, including being willing to take in stops at break even or even slight losses on scales in order to attempt to see if I can figure out a way to get a good long side trade. Usually I have to trip into it. I won't do it at any cost, but that's a very key area that I'm looking at. I want to make sure that everyone's clear. Both of these areas right here, these are both open gaps. They generally are fantastic locations to get counter rotations back to the upside. I expect responsive buyers in these areas. Again, it doesn't have to happen, but I generally, as of late, it's been over 80% of the time we have found very responsive buyers out of open gaps. And so I will be focused on these areas for longs, and I will not be shorting in front of these areas. I can tell you, definitely very important. Okay, so for guys that are not my coaching clients or newer, right, as we push down, so you'll notice this 10, 20, 30, right? So go look at what the current ranges have been, right? We've had 6 to 12 point ranges lately. That's like half of what we normally get, even in a what I would have considered a slow market, right? So if we push down 20, right, 10, 20, 25 points in here, right? It's, first of all, two things. It's going to look scary. They sell, market makers and traders are very good salesmen, okay? They're going to make it look like it is going to go to zero down here, okay? That is how they pitch these things, right? But you have to forcibly make your mind look at this as a long opportunity from these locations, okay? And not join the chorus of I'm going to push to the short side. That's how they get guys trapped. An example of that, in a much smaller scale, okay, because this is very important from a psychological standpoint, is simply yesterday afternoon. See how it looked like we were about to break down? We actually ticked a new low. Okay, the support zone, unfortunately, I tightened it up, and I ended up paying for that, right? I had the zone, I think, right here at 1916. So we were about a point out or half a point out from the zone. But see how it broke new lows? We were in balance yesterday, plus 500, minus 500 ticks, right? For the most part. And we were within the prior day's high and low all day. It was an inside day. So see how well they sold that we were going to have a breakdown to the downside here? And then they snapped it back up and moved it to the middle. Same way when they took it to new highs and they pushed it back into the middle. Don't be a victim on a balanced day. So how will we know if today's going to be a balanced day versus a directional day? Well, first of all, balance tends to start after the first hour, which is what we ended up having here. We had the first hour, we had a drive, and then we went into a balanced market. Second thing, the tick will tend to stay plus 500, minus 500. I actually think we had a weird tick yesterday of a negative 1,000 tick sitting right here. This is simply the victim of being an incredibly thin market, and a large sell, actually it was a small sell program, hit the market, but there's so few participants that it took us to a negative 1,000 tick. Okay, and the other point that's important from yesterday, and I did not do a video review last night, when you see a big 1,000 negative tick out of a consolidation period like that, that usually is a harbinger that we're going to push lower. Okay, even if it's not significantly lower, usually that doesn't mark the low. When you get a huge negative 1,000 tick, and it comes like here after you've had a big a series of downsides, that will generally mark as close to a low. It's not an entry by itself, but it gives you a heads up to start looking for a possible counter trade. Okay, so some people just take that, oh, it's a big negative tick, I should take a long, and all of those people got smoked on this, right? They took it here and they just, as we know, most people choke on having less, more than a 2-point stop. So most retail traders, if they looked at that negative 1,000 tick and they took the trade there, they were more than easily stopped out on that particular trade. Let's go back. Jeff, hold on. Well, right now we don't have any threat of an open drive higher at this point. I mean, I guess suppose we can gap down, but Jeff's asking, what about an open drive higher? I apologize, I just saw the questions, Jeff. So let me see, go back up here a second. 1923.50. I have Globex high at 1923 according to TradeStation, Micah. So I'm not sure what to tell you on that, guys. Does anyone else show a Globex high different than 1923? Is my data off? Okay, I'm getting Micah. Something's off with your data. I would check it. I show 1923. Okay, and so Jeff, to answer your question, what is that 30 at 1891? That's 30 points down from yesterday's close from that 1922. Okay, and so the reason I put that on there is it's simply a scale, right? Without going into great detail, markets tend to have rotations of 10, 30, 50. Okay, and so first of all, it would be almost inconceivable given the current ranges that we get down 30, right? But the whole reason I do that is because when I'm sitting there and concentrating, especially if the market's moving fast, right, and I'm an emotional guy. I tend to get wrapped up in the emotion of what the market is doing, and so I don't want to get wrapped up in that emotion. So I know that when we pass that, when we get close to this 20 mark, right, I am not overly eager to get short. As a matter of fact, I'm purposely talking myself through the other way. The market's down. We're down 20. Usually the conversation will go like this: Simon, we're down 20. The market usually doesn't close down 30, right? We usually don't even close down 20, and we rarely close on the low of the day. This is not the place to get bearish. And what that overrides is my gut feeling, or the emotion, because I'm an emotional guy, right, of going, oh, we're going to roll over. So this is the way so remember, I started off as the world's worst, most emotional trader on the face of the earth, right? So what my brain likes to say to me is when we're down 20 is, this is the day we crash. This is the day. I realize there's only an hour and a half left in the day, but we're crashing today. So we may only be down 19 now, but we're going to end the day down 1 million, right? We're going to zero by the close. That's how my emotions swing while I'm trading. So the conversation I have to have with the committee up in my head goes, we're down 20, and the conversation usually goes, hey guys, I realize that it feels like the bottom's about to fall out. We rarely close, even in a good market, a good down market, a bear market, we rarely close more than minus 20 on ES. We rarely close on the low of the day. Let's start looking for some long setups, and if I can't bring myself to take a long setup, let's just talk about taking our hands off the mouse so that I don't get caught in a short squeeze back to the upside, and I don't join everyone who's trying to short down there thinking we're going to zero and this is it, right? I don't want to be part of the course. I want to be the guy who's different, right? And even if that difference simply means I'll put my hands in the pocket, I can tell you I will most likely miss the crash. Whatever the next crash is, I'll miss it. But a couple of things about crashes that you need to note for yourself, right? Most crashes come from lows, not from highs. If you look at the 87 crash, we were already down significantly when the market crashed. 2000, I believe, I can say this safely, 2000 is the only time the market has crashed from highs, okay? And even when it crashed, right, for everyone who thinks we're overextended, right, in 2000, if you go look at the NASDAQ from high to low, starting in 2000, there was a 40% counter rally in between going from that high to that low, and I know of almost nobody, even an unleveraged trader, who could handle a 40% counter rally on a poorly positioned trade, even if they were trying to hold through that. Okay, so getting bearish just really hasn't been particularly profitable lately. Okay, and also very keen. You saw yesterday where I finally closed. I put it out on the private Twitter feed. I closed the last part of that NQ short, I believe, at 37.20 yesterday, or 37.20 and change. Right, it proceeded to go for another 4 points to the downside. However, had I hesitated in covering that, right, just a couple minutes later, right, it went to 37.16, I think, and then just a couple minutes later, 20 minutes later, it was already trading back at 37.25, and I believe it traded all the way back to 37.28. Don't get greedy in an up market. We'll know when it breaks. If anyone needs help of viewing what an easy break looks like, I'll go through the gold market again and explain it here in just a second, but I can't emphasize it enough. Our goal, okay, so let's restructure this for a second and take a step back, and I'll cover the shorts in just a second. My goal, which if you're in my room, your goal should be somewhat aligned, right? Otherwise I'm going to throw you from your trading, right? My goal is to get 1 to 2 trades a day. I obviously get more trades than that, right? But all I need to grow my trading account is 1 to 2 trades a day of 2 points apiece, and increase, as I'm moving forward, increase the number of contracts I'm trading, right? My second goal is when the market gets tight like it is right now, there's not a lot of rotation, okay, is not to overtrade, because I'll end up taking stops, frustrating stops, right, and digging a hole through this process. We've done, at least I think I've done, and most of the coaching clients I've spoken with, a great job. I think almost every one of my coaching clients is up through this process, and if they're not, they're at least extremely close to break even through this process. That's great. As soon as the market expands, there'll be a ton of trading opportunities, and the P&L will jump. Okay, that's my goal through this process, is just simply not to get crushed with taking multiple in and out stops, right? although I've come damn close with NQ the last couple of days. Um, um, then the other part of my preparation, right, is to be prepared to know that the market is going to expand, right, and stay balanced between the two of those. So if you've done that, okay, that is what I'm shooting for in all of this. I'm not shooting to try to figure this market out right now other than grab 1 or 2 points. And the reason why, there's nothing to figure out. Nothing's happening. Everyone's pretty much in agreement on price. We're going to have 1 or 2 things happen. We're either going to have a break to the downside. It's going to take some kind of economic data to get that to happen for anything other than a small little 1% correction, if we can even manage that, right? So what's going to happen is we're going to have to stretch to the upside to the point where there's disagreement in price between institutional investors, meaning we're uncertain of price, and we end up with half the people arguing for it going higher and the other portion of the argument for going lower, and we get into a tug of war, or we get into a rotational situation where people are getting out of, maybe tech and going into blue chips, or out of blue chips and into tech, or out of stocks and into bonds, or out of bonds and into stocks. We need something somewhere in the system to generate some disagreement and some rotation of capital, and we don't have that right now. That's why we're getting what we're getting. Okay, so on the upside, if we get to move to the upside, I'll take a trade at this 32, 34 location, 37, 39, and 42, 44. I would prefer to have tick divergence here. Okay, I'm a little bit slower to take these automatically. I will probably have to force myself to do this up here. Remember, there's nothing up here. Everything above this point is new highs, and we're just looking at exhaustion. This area is simply based on the current 10-point rotations we've been having every day, right? This would be, so we basically call it 10, what I'd call sigma. This is sigma and a half. This is 2 sigma, right? So that's why I'm looking at these areas for rotations lower, right? The other clues that we would have that you're getting good trade rotation, good trade location, I would have at least a 6-point rotation into these areas, okay? Meaning if we're trading here at 26, right, I'd want that to be the swing low as we're moving up here to look for the trade. Once we exceed 15 minutes, right, remember, I suck at being patient, okay, as demonstrated yesterday. I'm generally, because the market's slow, I'm hesitant to move my stops, okay, but at the same time, okay, moving it to that swing high after that 15 or 20 minutes, I won't sit there and fight it, right? And even yesterday, if you look when we were sitting in that zone, if you go back, you could have simply moved your stop 1 point behind swing high on the ES and let that trade ride out for you, and it would have been just fine. I want to address another point that someone brought up because I am going to trade. I'm going to stay on live at least for the first half hour, I think, this morning. Okay, very, very important. Yesterday, you heard me saying there's no rotation. There's no counter rotation. The market's moving slow. There's no liquidity. Okay, so the reason why I am talking in what would be considered a negative bias, right, or concern, I'm not trying to say the trade won't work. What I'm trying to do is keep my finger away from the click, okay, away from that mouse, so that I don't convince myself there's extra trades. What I'm saying is I'm already in the trade. If I'm going to take the trade, going in there, I'm already committed. I'm going to give it at least that 15 to 25 minutes to let it work out or take the stop. Now, if I take one stop, I may, in as slow as an environment as this is, I may say I'm not taking another trade. But what I am trying to do when I'm speaking out loud is I am countering the emotion that I'm experiencing. And what that emotion says is, as we're pounding towards those highs, right, is what that emotion is saying is, Simon, your stop's going to get run over. Or it may even be saying, Simon, just get long, right? This market's going to rotate up to the upside. So when I verbally say out loud, there's lack of rotation down, the market is slow, this is taking too long, right? What that is saying is, don't jump over to another market and try to increase the trade. I'm trying to slow my own thinking down to match the pace of the market, okay? And I'm also, at the same time, acknowledging this thing is slow. Don't make decisions too quickly, right? You saw how, if you were in the room, I totally goofed that 1922 short yesterday, yeah, I believe it was 1922, right? I had 3 shots at it, and I goofed all 3 shots. Why? I was uncomfortable internally. So let's take a step back, because I think this is just as important as where I'm taking trades. This is going back to Dr. Menaker's rules. Rule your emotions. Recognize, understand, label, and express. So when I was doing my journaling last night, I hate slow markets, okay? And there's two reasons for them. First of all, they have a great way of making you look foolish, okay? Because you can take a trade, get stopped on it, and only watch it roll down 10 or 20 points. I've had that happen to me many times, okay? Because it simply took an hour to get out of the zone, okay? Secondly, I'm ADD and ADHD. When the market is moving fast, it's very easy for me to keep my focus and concentration, okay? When the market is slow, I fall asleep on it and I miss small details, hence where my checklist comes in, okay? These are all, and what I'm trying to teach y'all through doing that live and through the talk is that y'all should have that same conversation with a committee in your head, okay? Every one of us has a committee in our head, and we have a greed member on that committee, right? We have a fear member on that committee. We have a I got to do something member on that committee, and a lot of us, I don't, but a lot of us have the I've got to earn my keep if I'm going to sit in front of this computer. I've got to do something member of the committee. And you better have a response as a trader to all those thoughts that come through your head, or you're going to find yourself either over trading, taking trades without proper rotation size, right? And the next thing you know, you're going to look and you say, why did I do that? And I know that I've been there. I'm assuming every one of y'all have been there, okay? So when I'm having that conversation, if I enter the trade, if I enter my NQ trade, right, and you saw, I think I came within 4 ticks of getting stopped. After I'd gotten stopped the first time, I came within 4 ticks, I think, of getting stopped the second time, right? And I even got so uncomfortable that I said it out loud. I'm going to throw a few of these versions in the volcano to see if we can appease the gods and get the rollover, right? And I guess it worked. Okay, so I took a small 2 or 3 tick loss on the trade on NQ for I think it was a quarter of whatever I put on. Okay, and then it rolled over. Then I got my opportunity. I took I forget what we're trading, 37.26, I think was, or 37.25 3/4 is where I took that short yesterday. And so once things start moving, so that shows two things. First of all, had I caved to the feeling that, hey, I don't want to lose any more money, I'm just going to take a 3 or 4 point stop on this NQ, or I'm just going to close it break even, right? I would have been pissed, right? I'd have been pissed at myself because I had to stop and I could have just simply left it there knowing it's a slow market, right? And then secondly, because I followed my rules and I hadn't clicked, I hadn't used up that energy, when we did get the rotation back and I recognized that negative 1,000 tick as actually being the beginning of the break and not the end of the break, I was able to re-enter on a rotation back up, okay? And then the third piece of it was, because I didn't let myself get frustrated, I was able to stay relatively cool and calm. When it did get down to that 1920 level, I didn't let the greed member of the committee going, dude, we're going to zero today. And instead I let the rational member of the committee go, it's probably not going to zero, right? We're summertime, this is a slow market, and you just knocked off, you know, from the swing high, you just knocked off 16 points, Simon. Why don't you take your money? And it all served me well, and I was able to enjoy the rest of my day and do a good job as a trading coach by leading by example. So all of that goes on. All of that is part of my checklist that I have while I'm moving through the trades. So long story short, I'm looking for shorts here, here, and here. I'll probably take them automatically, short of an open drive higher. To answer your question, Jeff, a open drive higher, we can gap down and do this, okay? It's rare that these have a lot of power unless it's a significant gap down. Usually it comes after 2 or 3 days of downside, and we get a negative 1,000 tick out of the gate, and that tends to generate open drives higher to the upside and turn into trend days. It's summertime, so anything can happen. Okay, it won't take a lot to push us up, and I really think we're begging to eventually land somewhere between this 34 and 43 for a swing back to the short side, right? I think they're trying to push it here. I don't have any evidence other than past experience to say that, but and by the way, on shorts, right? We can see from the last couple of days, ES has been much stronger than NQ, and what that tells me is even if NQ rolls over to the downside, I will be trying to press my ES to the upside, and if I had to choose a short, I'm more willing to press my NQ shorts than I am my ES shorts right now, just based on the price activity we've had the last couple of days. As everyone knows, once we open in 6 minutes, I can simply flip that picture immediately because I'm going to go from conjecture to how is the market guiding me, where the trap's going to occur. So right now, potential trap areas are obviously, okay, so Monday's high is there. This zone, by the way, is modified. Normally it would be at 2 points up down to here, zoom down in this area. Okay, so this is so close and we had an inside day. Monday's high actually becomes relevant, but for a trap, I want to see it close below Globex low. It is not sufficient for me to see us trade above, trade back below, right, and then trade back above because we can simply be getting the backside test of Globex high. Okay, so I want to clarify for my guys that are trap traders. Okay, the trap I need to see set here is that we trade above and then trade back below Tuesday's high. Where's Globex high sitting right now? Sorry, I missed that. 1923. So Tuesday's high and Globex high are essentially sitting in the same place. The trap in this area has to be set here. Okay, not at Monday's high. Okay, and then of course first hour high, first hour low is potential. That's a harder trade. And then prior day's high. Obviously Globex high and prior day's high are in the same place. Globex low and Tuesday's low, same situation, right? If we trap here at 1916.50, give it that extra little bit to stretch back above to push back to the upside, right? Don't take the trap if it sets right here and then get stuck underneath Globex low and have it reject. Okay, that's my only notes as far as that's concerned. Let's take a quick look at NQ. Let me set up the chart really fast. And then we'll look at the volume profile. So we have Econ. Remember this morning we're going to have something at 15 minutes after the open, and we're going to have something at the top of the hour. The top of the hour actually could push the market around. I don't think the one midway through will do anything outside of cause illiquidity. Remember in the morning what's been the pattern is we've gotten thin, and people have been waiting for that 9 a.m. data. So don't get spun around too quickly there in the first half hour. Give me a second to set up my chart here real quick. High. Where's Globex high on this thing? $37.25.75. Wow, that's interesting. At least we're getting okay, and Globex low is 37.1750. Joy. Okay, let me drag this over. Okay, the only thing I'd have to say is relative to ES, NQ has been weaker the last couple of days. Let's see if anyone else has any question. Yeah, I've got that. So it is, I think I have that marked on the chart now. Oh, excuse me, I don't. I stand corrected. Okay, so 1916 is low. So simply adjust. I stand corrected. Thank you for pointing that out. Move this zone down to 16. And now we have a 2-point zone, before we didn't. Okay, Globex low. And then this is Tuesday's low right here. Okay, so at this point, if I'm going to take this trade, right, see how poorly auctioned this all was? So what we're going to do, let's just slide this on back. Okay, let's just make it 1916 to 1917. We could, there's a little piece right here, right, so we could bounce prior to that, but let's focus on where it's easy to focus, right? So instead, so now I can tell you based on opening at 1918, Globex low will not have enough rotation to it to automatically take it. Okay, guys, my day traders and my scalpers know what to do. ES has been strong. It's quite likely that we come in and just revolve back up. But if you're going to take this trade, guys, you know, like I said, one of these mornings we're just going to blow through this, okay? I don't know which one it's going to be. I don't know if it's today. Don't be shocked, right? But this trade obviously has both been working on both NQ and ES quite nicely, so I'm not going to poo-poo it, but it's only a 2-point rotation. We all know that 4 3/4 is a normal rotation. Even in August, when it's a dog day of August, we know that it can get down to 3 3/4, 3.5, but it still exceeds 2 points. So just be prepared if you're taking this trade. I know it's been paying a lot of you guys. Just be prepared. You're going to get stopped sooner or later on this trade, and don't let it kill your ability to continue to taking trades as we move on. Okay. The other thing I want to show you, and I'm going to scrunch this up real quick. Hold on one sec. I got to take care of this chart real quick. Done. Save it so I don't lose my work. That's not what I wanted to have happen, but that's fine. I need 1,000 tick on this. And then I need this one. I'll go with a 400 tick to start with, and I'll bump it to 800 tick later this morning. And then the other thing I wanted to show y'all here, okay, yes, NQ has been underperforming ES, but look, we're just trading sideways is all we're doing, okay? See that 37.20, nothing's going on yet. We got to break below this lip down here, okay, 37.07, and then we got to get below this lip, right? Then but below this 3,700, okay? Yes, we have some support right here, but it's really very poorly auctioned. Even at this open gap, it's really very poorly auctioned all the way down to 36.80. Be aware of that, okay? It could get very slippery in this location. Okay, the other thing to keep your eye on is if we're going to hold this, okay? So half this gap from here to here is right here. Let's get rid of some of this stuff so we can see this easily. Cancel. Okay, we expand this back out. See this area right here where we're getting rejection out of? Okay, this 37.14 is now halfway back. We're not even quite getting back to it, okay? So this 37.14 area becomes quite important. There's actually an open, I believe there's an open gap actually sitting right there. Let me go back and look. Why do I have this red line there? Did I just add that? Oh, prior day's low. There we go. So yesterday's low was right into that half back, but that half back is based on this swing low. If you go back to the true, from the bottom of this gap, if you go back to the true swing low on this chart, it's going to be somewhere, let's see, we'll just draw multiple ones and try to figure out the area. Okay, so it's going to be somewhere between, let's see, and see what I don't try to figure out is exactly where the perfect place is. I just look for areas and then go look for structure. Okay, so you could call any of this. Okay, it just depends on, we're all going to vote with our money, and we're all going to decide which is the best area for support, okay, or a retrace. So somewhere, bottom line is somewhere between this area, which is a 50 to 60, these are all various 50 to 62% retraces, right? So somewhere between here and here is the true 50%, and obviously that's a large area, 3660 down to 3600. So again, that just becomes an area that I'm going to look for some kind of structure to help me look for reversals, right? And it's quite possible, just working off of this 30-minute chart, right? Well, it doesn't take, there's an open gap right there. That could be 1 point. Although, you know what, this open gap's been filled, I stand corrected on that 30-minute bar. So this is the bottom, and it's poorly auctioned down to here. Then we have it poorly auctioned down to there, here, here. There's an open gap sitting right here, and then finally we have this little lip right here, and then if it pushes behind, we have this little area right here, and then of course it get ugly. It would not surprise me, right, to see us kind of come through and get reactions on any of these places down here. Okay, I do note that this area seems particularly poorly auctioned in here. Okay, and so I don't know where. I'd have to go, and obviously this is a 30-minute chart, there's no detail, but I do know that that area is important, and I'll start looking based on stretches intraday and also stretches from the highs where we could get a potential reversal. But I do know that area has become is now important. Okay, and I will judge based on price action, and then I'll drill down on those charts on the individual days to find trade location. Okay, so at any rate, I think that's important. Y'all should keep that in mind. That's all. I don't think it's going to be important for today. And right now, as you can see, we came right into Globex low, and we got that responsive buy. I hope a couple of you guys got it. I was busy yapping. Ron, I see it on Skype quicker if it's urgent. It's hard for me. This chat box is not very large, and they don't give me a good way to increase it. So let me go up and see. Jason, question: when you do your zones, what is the main criteria you look for? Jason, that's a long conversation. The best hint I can give you is I start with the prior day's high and prior day's low, and I work off the volume profile, but that's something I spend a long time with my clients on in coaching sessions, working that out. It's not a secret. I don't mind showing people how to do it. It's just not an easy conversation to be had here. Globex low. Ron, did I miss your question somewhere? I missed 5 minutes. Did you mention Fed Day, Beige Book at 1 o'clock? I did not. Thank you. Okay, so there we go. Beige Book at 1 o'clock. That's 12 o'clock. That's at 1 o'clock Central Time, 2 o'clock Eastern. Beige Book. That can be a market mover, by the way. And then for those of you who trade currency tonight, Aussie dollar has trade balance. That has been in the past potential big mover for both our markets and currencies worldwide. Okay, you talk about the Beige Book. So no, I didn't. Beige Book, 1 o'clock. Okay, so guys, FYI, that can move the market late in the afternoon. Be aware of it, and I'll call it as I see it. We'll kind of reset there in the afternoon and take a look at it there. Right now, obviously, we're getting that response off of Globex low, and I think we're just simply waiting here in a couple minutes for whatever the econ is, and then we'll have the econ at the top of the hour. I'm not overly eager to trade this just yet. And looking at the 5 minute, you can see we're now pushing lows. So we've gotten the reaction off of Globex lows. That's the trade, right? Now we're pushing to prior day's low. Okay, and my guess is we'll probably get a similar reaction right off of this, and I'll look for a potential trap above here. So again, NQ is weaker than ES, and notice that ES isn't pushing the lows while NQ is. Here's ES, and you can see once again it is definitely stronger. As a matter of fact, this is a situation where on that last push down, sometimes I'll arb and see that NQ is pushing, and if I think we're going to rotate higher, I didn't this morning because I was too busy yapping, I'll take this trade and I'll put the stop right here below. But then if I did that, I'd be willing to re-enter. I don't think I've covered that trade with anybody. It's been a while since that's set up, where ES is definitely stronger than NQ, and they're obviously trying to trap now. They're trying to trap NQ back above, okay? So the way I'd handle that is, well, a second ago, had I been trading, I would have taken that trap down there and put a stop right below prior day's low. There's just not a lot of participants, or this would be more of a rhythm, right? This is just random guys pushing trades around because no one's trading. There's just no volume going through. Okay, so I mean the range is literally, we're 10 minutes in, we have a 2-point range, 2 and a tick. Okay, so not much to get excited about. Let's see if anyone else had a question. But Jason, there's no big secret on the zones. Okay, I start off with prior days low, prior days high, and I move up and down 2 points. The trick is adjusting for trade range, and then if Globex low, Globex high can kind of screw that up. The hard part is the zones above. I'm pretty good at nailing them when they're in outer space, but I don't always. Okay, and then the zones far away, right? Figuring out where you're going to get the reversals, but it's not an easy 1, 2, 3 thing, which is why I've stressed to people. If you want to start reading on volume profile, which is where I start the zones off of and get an idea, there's a book by Dalton. It's considered, I think, there's one of two fathers. He's one of two fathers of market profile. He wrote a book called Mind Over Markets, probably about as exciting as your 9th grade science book was. It is dry reading, and I'd only look at the first 4 chapters, forget everything he says about overnight, because I think he's completely wrong on the overnight inventory portion of the deal. But I would read the first 4 chapters, and then you can forget about, he breaks it down into periods, A period, B period, C period, D period. You'll see what I'm talking about if you get the book, and I would completely ignore that. Your computer will do that for you. He started this way back in the 80s, and you had to do it by hand, and it was important. All that I care about is the actual volume profile and the information about high volume nodes and low volume nodes and the general concept of auction market theory. Speaking of auction market theory, by the way, we see how, look at the area we're in right now. Okay, we can see yesterday, look how poorly this was all auctioned, right? See how it ripped through? Okay, that means that we can rip back down. We can either come right up to here, which we almost did, right? This is really our first area where we're well auctioned, right in here. Okay, but see how easily we could just rip to the downside on this thing? Okay, same thing on NQ, this 37.13 3/4. We got damn close. We didn't quite get there, right? But this can all be auctioned through relatively easily, right? To translate that to a 5-minute chart, I need to put up a 1-minute chart too. Hold on a second here. Paste window, insert, symbol. Okay, so the tick is primarily negative, okay, but it doesn't mean a lot in the first half hour. It's still early, okay? And you can see we came right down to Globex low just now. Again, I'm not overly eager to trade this, and the reason why I'm not overly eager to trade this is because I'm not getting extremely well compensated for my risk, right? I mean, it's taking a lifetime just to get 2 points out. The whole idea with the 2 points is it's a relatively easy out, right? And in difficult markets, you know, with it taking so long, time is not your friend with leverage, okay? I'm trading really leveraged. To give you an idea, if you had $10,000 in an account, I'm probably trading close to 3 or 4 contracts per $10,000 that I have. Now, that's not insane leverage. I could trade technically, I could go all the way up to probably 8 or 9 if I had to, and there's times where I've just gone way overboard on my leverage and I pushed it to 5 or 6 contracts. But that's a ton of leverage. 3 or 4, most guys, you can't survive that if you don't know exactly what you're doing. I want to be compensated for the risk I'm doing, and then the time, I don't consider it my friend. So this is the move right into Globex lows. If you think they're going to be a response, right, you just simply have to know your numbers. There's no way to look at this and go, oh, we're going to come in and react out of that, okay? So I don't know what else to say about that other than we're moving into those lows, and we have econ in 2 minutes. So you may want to wait till after the econ comes out. We can't be certain. And then on NQ, we just pressed, right? We just pressed the low right there at 37.1379. Now that's sufficient for me, so I'm going to actually take an NQ trade here at 37.1525. I'm taking half my normal size because I'm in front of data, and I am putting a 5-point stop on that. That means 37.10 is my stop. I'm also taking, and again, I might be getting exposed here on both sides, I'm taking a half size trade on ES at 17. Okay, so I took 1917. My stop is going to be 2 points behind the zone, so that's 1914 is my stop. And I'm on half size on both of those. To give myself a little bit of help, I am going to, if I can, I'm going to scale out at 37.17 and bring my stop up, considering we're heading into news. But I may have been yapping instead of trading. Come on, guys, make it easy. The other way to handle this now that we have rejected off that low is you can bring your stop 1 point behind that 37.14 low, which will bring you to 37.13. The odds of a stop are higher, but your risk is lower. So take it either way. I'm putting my stops in at 37.10 right now, and I'm going to stay with that. And yes, I'm aware I will get wiped one of these days taking this trade, but these trades have worked day in, day out, over and over again for weeks now. Okay, and I'm talking about going all the way back to March, the Globex high, Globex low trade. So I'm due for an ass kicking, but haven't gotten it yet. Scaling 37.17, I'm out half. Okay, and so now since I don't feel like screwing with it, I'm now moving my stop 1 tick past the low. So a new low puts me on toast on the balance. Well, actually, no, I'm in good shape. 37.17, 15, that puts me at 13. So dyslexic moment there. I'm scaling a little bit more here at 37.18. I got 18 and 18 and a quarter. And I have about, well, there's not a lot of contracts left at this point. Okay. Okay, I'm all out at 37.20, done. So that was +5. Okay, and I'm going to ride this NQ. And now that we're lifting, I'm just going to simply move the stop to 1916.50. I'm going to scale 1919 right now. That's +2. And I'm done there. And I'm moving stop on the second half. Both of these were half-size trades, by the way, guys. Stop is now to the low of the day, +2 ticks. So actually, I'm going to put it at 1916 to account so I don't get 1 ticked below if we come back after news. And now we just see if we can get lucky on the other half. It's either going to stop me on this other half. I'm going to use the profit for my P&L today of NQ, and I'm going to ride the second half and see if I can't get lucky. So that's how I do it. Like I said, I had no idea if the trade was going to work, guys. None whatsoever. It just kind of stopped there, gave me an opportunity. They could have swept me. And that's exactly what I want to show is I don't know. Okay, I'm taking these with no sense of the only conviction I have is in my numbers. Okay, so let's see. Maybe they'll give me a gift on the second half and we run today. If I'd been full size, I'd have taken half out, move stop to break even. I would have scheduled another half out at +5 and then see if I get a runner for the balance of the day. Watch me regret that NQ trade. And so now we've got it easy, right? If you want, you can move your stop to 1917 if you took it there on your trailers. You can take your 2 points and be happy. There's nothing wrong with that. You throw in another 2 points on the barbecue grill. You're very welcome, David. Nice job. See, this is how it should always work. Nice and easy. And so we have econ, remember, in 10 minutes, okay? If you're worried about econ, if you'd be upset that the trade came all the way back against you, you've got 2 1/4 points on this thing. You can take it and go home. That's a good day. It's $100 a contract. It's $112 a contract. Does anyone have any questions over it? Because I'm doing absolutely nothing now. I'm on hold. My whole decision's been made. We're back to 0 tick. Now we need the short squeeze to come in. Ahead to 1930, please. Make it easy on me. I'm not looking short in front of the econ. Okay. That was a pretty good strong response off of ES. And again, if I'm looking to short anywhere, it'll be on traps on NQ, which has been consistently weaker. We're still negative on the day. And by the way, notice how I'm feeling a little bit more upbeat. Now I need to work to make sure. The reason why I said I'm not taking a trade into Tuesday's high prior to econ, right? What I don't want to do is go feeling super confident and go, dude, look what I just got. I want to start the timer. I want to see how long am I feeling this way, right? So let's do that. 8:50. I'm going to go over to my timer on my iPhone if I can get to it, because I am feeling kind of pumped. Start. Let's see how long it takes me to get back to a neutral, non-manic position, right? So now you've got 3 points at 1920, right? Know your trade, okay? I'm comfortable getting stopped on this thing, okay? Although I got to admit, I will now, I don't want to see it come all the way back at this point, so I am going to put it back to break even on the second half. So my stop's now at 1917. That means that it could come back down in 1 tick and reverse and go higher. That would suck, but that could happen. I'm all right with that at this point. Well, good. Nice job, Micah. And then again, right? Notice how, you know, if we looked on NQ, dude, it's below Globex low. It looks like it's going to tank. Every emotional trader out there freaking pinned themselves at the bottom, and that's why you're getting this reaction now, right? You've got to stay balanced in your trading. It's not an easy thing to do, right? Because there'll be other markets where you'll look at that trade and it'll whoosh through and you'll go, why didn't I short it, okay? But I can tell you, you give me every guy who does not wait for a rotation to get into their ES position versus every guy who waits for the market to come to them, those guys that are boom bust are the ones who chase. Well, great. Sorry, I was talking to someone who sent me a message there. My friend Tony's having quite the morning this morning. He's a little more cowboyish than I am, but he nailed the lows on NQ and ES as well. Oh, and by the way, that's a great example of how I got the low, but didn't intend to get the low. Like, there's no special art there. Okay, so I guess I should go on there and write boom, nailed the low on Twitter, but I'm not going to do that, right? It just worked out that way. And Micah, just remember, that's the same setup that on that Friday morning, if you recall, you took that same setup in the Globex low and it stopped you. I think it was 2 weeks ago, right? It's a great example of why you got to stay consistent in your setups, okay? Well, a lot of people will go and go, boy, I just got stopped on this trade, so I'm going to watch it for a couple days. Then you come back a couple days later and you take the setup, it stops you again. The key is to know your numbers so you can take it consistently day in, day out, or you know to stop it completely, one of the two. What kills traders is taking trades that are not on their menu, okay, and guessing. And no one wants to guess. Guessing sucks. And by the way, 1930 might be a little ambitious, right? On my part, I had to get through Tuesday's high. Certainly, there's a good chance we're going to get rejection out of there on the econ. But ES has definitely been stronger, okay? And again, just because I am writing this thing on the second half does not mean you have to ride this thing on the second half. Follow your trade plan. I cannot emphasize that enough. Follow your trade plan. It will not be the first time I've let a trade come back. As a matter of fact, at 1921, I will sell a few more contracts. I'm offering out at 1921 right now. Come on, hit me. Oh, I may live to regret that. No fill, 1921. I'll give it a minute here. And notice that moving to Globex high, I'm not taking that on NQ again. Just a couple of minutes in front of Econ. No thanks. They'll give me this time on 1921 most likely. Why am I taking 1921? Well, it's 4 points. That's $200 a contract. That's a great way to get paid. Or not. And I'm going to get to do my bit of self-promotion. By the way, we haven't had gap fill, by the way, yet. There's the open gap right there at 22. So hopefully they'll give it that 21. And by the way, you saw me talking about that ES just to catch, and I'm actually feeling quite back to neutral now, right? Right. That talk about, oh, we're going to 30 now, that's the emotional part of me going, boom, I nailed the lows. I know I'm going to make $1 bajillion today. Okay. That's me, the scale at 1921, moving the stop up. That's me trying to get back to neutral and actually looking at what we have instead of calling that 10-point trade, right, or 13-point trade. 13 points, like we haven't had 13 points in forever, right? I need to get back to balance. The only way I can do that is by talking it out and listening to myself and what I'm actually thinking inside versus what I'm saying inside, right? That's not, the two aren't matching. So that's why at least I'm trying to get this 1921. I have not gotten filled yet. I may be being too stubborn at this point, guys, on this 1921, just FYI. Oh, maybe I'm wrong on this. Hold on. I had... Well, let's find out. Hold on one second. Maybe I'm wrong. And guys, I stand corrected. I'm sorry. Harry, you're right. I've got... I don't know why was I thinking that? Actually, Harry, I've got Globex high at 37, 32, 85. 75, excuse me. Let me change that. Why did I have my Globex low there? Globex high there. That was a mistake. But I was wrong as well. So 37, 32, 75, Globex high, guys. Just FYI on NQ. I made a mistake. Apologize. What was it? 37. I actually stopped there. What was there? Oh, Okay, well, I guess it's not here nor there. We're covered. Got my 21. There you go. Good question. Cell 22. I'm going to give it a minute on this, guys. I'm not shorting automatically. I might be wrong, but no, I'm not. I'm not taking it because I haven't seen any willingness for ES to roll to the downside. Okay, so I might be completely wrong, and I might play it off a trap if we get an A-grade trap there. But this is gap fill, and we're still not at yesterday's high or Globex high, right? So I'm going to wait. That's simply gap fill. And I'm going to wait for a pushback to the back end of that zone. It could, but it's a good question. It could reject out of here, Ron. I'm just going to wait. I cut that NQ trade way early. I had 10 points in that. Yes, sir. Globex at 5 p.m. Harry was asking. I start Globex at 5 p.m. Just so everyone knows. I think everyone does. That's when it opens. Apparently the ISM number was relatively strong, guys. I don't know what the hell that means, but it was strong. I don't know what it means for the market, but I mean, look, ES has just had no sellers in it for days, right? Why try to be the hero there? Okay. That's all I can say. So it's not weak. We know if we get below global slow now, we got a weak market. There'll be plenty of time to make money on the short side. I'm just not going to commit myself to getting crushed in a slow grind, right? This is what I mean. At least, guys, at least that 23 to 24 at minimum. And you may even want to look for the trap, preferably than just taking it in there. Why? Again, Ron, same reason. Okay, so you may be the guy, you may be the one that where we nail the high, right? If we take that trade, we nail the high. But we've been consolidating for 3 days now at this level, and we're due for a move. And there's been no sellers in ES. So I'm going to put my hands in my pocket just for a little bit here. And first of all, if we think we're going to get a reversal, right? When's reversal hour come? 9:30, right? They're clearly not dumping. Okay, maybe they will in a moment, but they're not dumping it right now. Okay, and I don't want to set myself up in a position to get hurt after A, I've got a good start to the day, and B, look at this over the last couple of days, right? Look at where we are. And let's make an argument for it one way or the other. Okay, so this is either the top, and we're simply closing the gap, and we're not going to move any higher. That's officially the high, and we're going to break down. Okay, so what we went through this morning, moves back to the upside have been easier than moves to the downside, right? Yesterday, it took me almost an hour to make my short work, right? Whereas this morning, it took me almost 4 minutes to get positive on my long. Okay, so I've been dying to get a good entry long for 3 days in a row and haven't been able to get it. Been missing the zones by just a little bit. Okay, and the last thing I'd like to do at 9 in the morning is have to wait till like yesterday, 10 in the morning. On the other hand, if we do fall apart from here, right, and we get a big rotation down, okay, cool. Even if I miss the entire day, tomorrow we'll have good setups. Most likely those setups will be to the long side, right? Number one. But number two, and importantly, right, even if we're going to start to roll over and go to the downside, I didn't cover this. If once we slow down here a little bit, I might. But go look at the gold chart and look where it broke down. Just like this was an easy long this morning, relatively speaking, right? Finally, after multiple days of denying me, got the trade, right? Once we start to roll to the downside, there'll be plenty of easy shorts, okay? And I just don't want to waste time and energy and possibly dollars trying to force my hand there. Now, if these guys are calling that a top, okay, and this is a triple top or whatever you want to call it, and we're going to roll to the downside, great. Let them roll it to the downside. We'll find setups, okay? We'll get trapped below, but also remember we'll have traps from levels lower, okay? But by taking shorts here, we're jumping in with everybody else who's calling the top and from, I mean, I don't know anything about ISM or econ numbers. I do that purposely. I say stupid for a reason, okay? But from what I can tell, this is a good number. So this is only one or two ways of interpreting this. Fed, and it'd be interesting to see what the bond market's going to do. I'll go look at that, right? The Fed is going to increase tightening of the QE, right? Well, that'll put a dent in the market, right? But so far, they've been very clear in their telegraphing that they're going to keep it right where it's at, that they're targeting inflation, that we haven't hit those numbers yet, okay? And then secondly, that idea hasn't worked like in 2 years now. So why don't you let them prove it to you and then take the easy trade? If anything, we're back to these small, tiny counter rotations, right? Even NQ is not really exactly rejecting, and it was the weak sister yesterday. So if we get above on NQ, what do we need to have happen here? Let's see. Okay, there's NQ. We've been in the same place for 1, 2, 3, 4, 5 days. Okay, sellers have not been able to get an advantage. If we can get them to get below this lip, this is that halfway back area, right? If we get below this lip, we've got plenty of easy trade to the downside. Okay, but until that happens, we're range bound, right? So let them really extend the range, right? This 3740 is truly the top of that range right now. And secondly, we're actually making higher generally, with the one little exception right here. It's actually higher lows technically. So let them let them break it first and then step in. Did it all make sense, Ron? Or do I sound like a madman? I do, Harry. Yes. If I haven't answered that question yet, people ask when I start Globex. As far as I've known, Globex has always started at 5 p.m. Eastern, 5 p.m. Central, 6 o'clock Eastern. Let's take a look at the tick real quick. Huh. Broader market's still getting seller pressure. That's funny. Look how this rally is getting incredibly narrow. It's not funny like in haha, but funny. Yeah, Ron was asking. I was just mentioning that, Ron, with the tick being negative. It just means the rally's narrowing, right? The tick represents the broader market on the NYSE. It means we're just getting slight selling in this case on the broader market and buying. So there's a rotation out of the broader market into the S&P 500 and the narrower issues. The rally's getting narrower, which is fine. That happens in bull markets. They get rally. People focus more and more on the better quality stocks as it moves up, right? And if you thought this was a top, by the way, guys, you do have a setup here. You can take 1921.50 if you have conviction of the downside. I don't, right? But if you have conviction of the downside on this 1921.50, and then you can put a stop at 1923.50. Okay, so that puts you with a 2-point stop. But in the bull market, you can end up taking a lot of those stops. It's not a trade I'm taking, but if you're dying for a setup, that's a setup. Okay. I'm not sure it's one that'll work. NQ's pushing highs here. We've gone positive on the day. I don't think I'd want to be short. Oh, you know what? I need to push. Publish. Um,